Hello, welcome to another episode of Test, Optimize, and Scale. Excited to have Chris Graebe here with us today, equity crowdfunding expert. I've seen him involved with some of the top campaigns on WeFunder and just a key personality in the space. Chris has a deep background, actually starting with Road Rules on MTV, getting into the world of Amazon, faith-based community. Excited to go through all of it with you today here, Chris. Thanks for joining.
Absolutely. Super excited to be here, Jason. Thanks for having me on, man.
Excellent. And I know we have a lot of mutual friends in the space, have heard bits and pieces of your story, of your tale. So looking forward to diving in further and maybe getting the audience more familiar with who you are and what you do.
Sure. Absolutely looking forward to it, man. So ask away. No questions are off limits. If they are, I'll just redirect, I guess. No, let's have some fun, man. I'm a pretty open book, so there's nothing to hide from me.
Sure. And that's how we try to have the dynamic here on the show too. So I think it's going to be a great, authentic conversation here. Where did it all start for you? Was it, again, to the Road Rules days in the 90s in MTV?
Man, I grew up in the cornfields of Indiana. I came from a town with one stoplight. I knew nothing of the word of entrepreneur, founder, startup, raising capital, any of that. So, I left that little small town and went on a big adventure. And one of the first adventures I took was on MTV. I was a cast member of Road Rules South Pacific, season 12. So we got to go to New Zealand, Tahiti. It's the weirdest thing, man, when 72 million people are watching your face on what was one of the original reality shows. And so, but needless to say, that was quite a long time ago. My hair was not this color. I did not have 5 kids at that point. But it was a wild, awesome ride, and it opened up quite a few doors.
Very nice. And so you have this attention, you have this individual brand awareness. What did you do with it from there? Did that lead to different industries and business discussions, maybe digital from that point on?
Yeah, I think, one of the things is this was pre-YouTube. There was no YouTube out there. There's no social media, right? I mean, I'm that guy. I'm old enough for all that to go down. But, it was an interesting piece. Like, it definitely opened the doors. It was the weirdest thing walking down the streets of some random town in Iowa or even in New York City. People were like, Chris, you're like, I don't know who you are, but you know who I am. And so there was a level of influence. I got to kind of taste those early days of what it meant to be an influencer, I suppose, from reality TV. I'd say I was like a Z-list celebrity. I got to walk the red carpet on the the VMAs and do all that crazy stuff. But out of that, the doors kind of opened for me. And in your early 20s, you're still just going, who do I want to be when I grow up? What does this look like? And I don't know if people watching out there feel this way, but for me, there was never really a box that I felt like could be checked for who I am and the way I'm wired at career day. There's an accountant, there's a doctor, there's a lawyer, right? There's, fireman or whatever. And none of those boxes fit the mold for me. And so I've lived this Forrest Gump type of a life. And it's really been a wild, awesome ride. But I even married a woman named Jenny. So I'm trying to fit into that mold. So out of that adventure, I traveled and started speaking. I ended up in the faith-based community, kind of the nonprofit sector for a long time. And one of the things I did in that journey is, again, settle down, had kids, had roots, and then try to figure out, as the economy was changing, digital, online businesses, things like that, I stepped into the world of Amazon. So I started private label selling on Amazon in 2015. It was still kind of, I would like to kind of call it the second wave of the Amazon sellers. It was still fairly new. Nobody knew about it, but it was one of those things that I was like, okay, I can do this side hustle while my kids are asleep. I could be chatting with manufacturers in China and doing the private label thing, and it just went really well. It was one of those things, like I hit on a couple products that were really successful. And so out of the gate, we started to see big success, and I started to learn a lot. But then out of that, I would say for anybody who's watching, you don't always want your first product or first couple products to be huge successes, because then you start to believe you can hit grand slams and home runs all the time. And that's just not the case. And then you have this confidence, this false confidence that you kind of know what you're doing. And then next thing you know, you take a loss. And so it was a really fun ride. We did over $2 million in sales as kind of a passive side thing for me, which was great. I mean, it was the first time I'd kind of hit any kind of measure of success like that. I'd had small kind of business ventures and service-based stuff and stuff I'd buy and sell. But this is really kind of my first foray into the world of entrepreneurship. And then out of that, I just started multiple companies, some that were successful, some that weren't. But I just kind of realized when I looked across my life, I found myself multiple times on a camera, on MTV or on a stage speaking in the nonprofit space, and I just realized that's something that I'm pretty good at. And so I thought, well, let's step back into the world of teaching. It's not on the faith-based side of things, but let's teach people how to sell on Amazon and do Shopify and do the side hustle thing. And that was a good little run, but people can go buy courses on Udemy for $12, or they can go to YouTube and figure out how to sell on Amazon. And so one of the things, some guys I was working with in the financial publishing space, we said, let's pivot to the world of equity crowdfunding, because there was a lot of things that converged for me. I'm really passionate about founders, early stage startups. I mean, I had done multiple of those on my own. And I just decided, I was like, okay, let's go over here. I think there's a real opportunity in this brand new emerging space that's called equity crowdfunding, Reg CF, that people still don't really even know about, but I think it has the potential to grow. And obviously, a few years later, here we are, and the space is absolutely exploding. So, as a long story, I'm going to take a breath. What questions do you have after that?
Absolutely. I think you hit a lot of the nails in the head of the early stages of equity crowdfunding. I'm still explaining to people what Reg CF is on a daily basis. But love the Forrest Gump story, if you will, starting from early stage reality show influencer, heading up in the faith-based nonprofit space, your success in Amazon, understanding your strengths and how you have the ability to educate over video, taking it from stage, and then focusing that into financial publishing. And even working in equity crowdfunding, that's somewhat of a new term for me. I like the way that's coined. I picture, educational funnels that are designed to get audiences who know nothing about, let's say, retail investing or accredited investing, but for the equity crowdfunding vehicle, and bringing them up to speed, making it something that's trustable for them, an actionable vehicle, if you will.
Yeah, I think the thing that's interesting when you talk about someone who says, okay, I'm going to put $100 or $1,000 into an early stage startup in the world of equity crowdfunding, these are retail investors. And so there may be somebody watching here who has stumbled across this to go, yeah, that's me, and I don't quite understand the space. And so one of the things we're trying to do is, I have a YouTube channel and a company called StartupWire where we're trying to leverage content and educate and really help retail investors understand how this space works and what they should be looking for, and every deal is different, and what fits best for their portfolio. So there's a lot of education and a lot of information that needs to kind of be acquired by the new retail investor, and nobody's really spending a ton of time on the education side of things. I think most of the space is focused on deals, focused on companies getting on portals and platforms, but nobody's really focused on going like, okay, I've never done this before. Because you can go out and learn about how to invest in ETF and, go do your mutual funds and there's tons of content on that out there, but there's just not a lot of information to help people go, okay, this is a brand new thing. I think this is neat. What should I do and how should I look at these deals? So we're trying to help people in that regard as well.
And we need more investor success stories. And that only happens from the expertise, from social sharing. We need investors to not only know what equity crowdfunding is, but to be able to paraphrase it and convey that info over to their friends, to their family, and talk about different positions, different exits they've had. I think the more visible takeaways, the more visible success stories that we're able to show, the better it's going to be for the whole industry.
Well, I think the thing that's interesting is I've kind of surveyed and chatted with a bunch of retail investors. There's two different things. I'll share one. First one is they're not telling anybody. Right now, if you're an anesthesiologist in Phoenix and you're going, I love this crowdfunding thing, you're not more than likely telling your friends about it, because there's a place for going like, am I crazy? Is this a good? But you know what's going to happen? The second one of those deals exits and pops off, that's when they're going to start telling everybody they know. And that's when you'll start to see a bigger, wider adoption. The bell curve will start to go up. More people will know about it because people will be doing the word of mouth thing. Well, I put in $5,000 and I got a check back for 20. 3 years later, they're going to go, wait, that's a pretty solid return. How did you do that? And so that's the first thing that I'm coming to realize, is that there's still kind of this hush-hush thing. Now, someone is a founder, they have a list, that that's sometimes the way people will get introduced to the world of equity crowdfunding. Okay, I love this product. These guys are raising capital. Okay, that got me introduced to it. But a lot of times, those who are like the ones, they're kind of in quiet going, this is a fun little thing on the side. So the second thing I want to say to that is, as I've interviewed and talked to different retail investors, there's a really, the way they see equity crowdfunding is a different bucket. It's not an alternative to their 401ks or IRAs, right? Like, when I say, what do you do with this money? What is it that if you weren't going to put this money into this startup, say you had $1,000 and you're looking around going, okay, you're perusing some of the portals, you're going, okay, where do I want to do it? What would you do with that money if you didn't put it into this deal? And it's really interesting, the answers that they gave to me. And I'm for those of you watching at home, I want you to drop in the comments, or I want you to say, before I say what their answers are, what do you think they are, guys? Because it's just fun. Everyone's got, okay, I have an answer here. So, but here's the three. Here's the three. Now, Jason, do you want to take a stab, or do you want me to just tell you? You don't have to. I'll just tell you. It's okay.
I would say it's more of disposable income. So items that would be selected there. I don't know how specific that gets, but luxury goods, fashion, things that they don't need the money for. Maybe different experiences, different emotions that they're getting from it.
You are exactly right. So one of the three things that they say is, I would have bought a motorcycle with this, or I would have gone on a trip with this money, or I would have blown it on something fun, a vacation, whatever. The other answer is they would do absolutely nothing. It would just sit in a savings account. They wouldn't do anything. They wouldn't do anything with it, right? It's just like, nah, just leave it there. The third thing is really interesting to me because it gives me an insight into the way people are seeing the space. Is they would say they kind of compare it to real estate. They say, like, if I wouldn't have done this, then I would have probably put it into some sort of investment property that I would have and I would rent, because at the end of the day, in their mind, it's like everybody knows this is a much longer tail investment opportunity. The return has a potential down the line.
Absolutely. I've talked to some investors that said they wanted to be involved for the experience of it. Didn't get to the point of where those dollars would go. Otherwise, I find that very interesting. Actually, I'm sharing some of these notes. We put together strategies with target audience personas, so I want to pinpoint that. But they want to be involved in a high-growth company in whatever the vertical is. AI, automated retail, blockchain, health tech, whatever it may be.
Right.
They want to be a shareholder, an owner in that organization, and that makes total sense. Taking it from the motorcycle type purchases, the trips, the saving makes a lot of sense, and it's not doing anything there. And being able to make that analogy to real estate, that's very fascinating.
Yeah, it's interesting, man. So, and there's a lot of motivations. I think people go, this is fun, right? If you like risk and you're willing, because it's such a risky space. We know percentage wise, probably majority 90% of the startups don't make it, but those 10% that do, there's a potential for really big return on the other side. So.
Sure. We don't get to speak to the investor side enough, working with issuers as a marketing agency or even on this podcast. What are the recommendations there? Is it more of participate at a comfortable level with 10 companies, have some diversification and play for that one win, anticipating most of them to, fall apart over the course of a few years? What are the best practices for investors?
Yeah, I mean, everybody's got to do their own due diligence and research and find out what's best for them. But if I was sitting across from somebody talking about kind of the way I see it, is that, you almost want to look at a model of, what do the VCs do? And if you're going to scale it down, what do the banks, what do the VCs do? Well, what they do is they hedge their bets, right? They spread it across 30, 40 different companies in one fund, and they know that, 2 to 3 of those are going to have the really big returns. Maybe this mid-tier will just at least get them back their money, and the rest of them are going to probably fail. And so I think that's the way I would approach it. If someone said, okay, I've got 10 grand. Okay, great. Well, let's look about it. Go small in the first one, just see if you like it, you like the process, start to evaluate deals, really take some time and look at these deals, because when you look under the hood, there's a lot more that you can see that maybe that's just on the campaign page. Okay, what are they going to do with these resources? Is there some kind of dilution that's coming down the line? And so you can just really, I think that's the pieces. Once people get educated and they go, okay, this is fun, I can get excited about it, and just like everybody says like, don't invest in something you don't understand or don't know. So the more someone can get educated, the more they can look at deals and just put a little bit in here and a little bit in there. Yeah, I think a bigger portfolio in this scenario, and this not being your main, retirement account is very much what needs to happen here. Does not
high risk, high return,
massive high risk, right?
Percentage of the portfolio, absolutely.
Right.
That makes total sense. I'm glad you guys are getting that out there at StartupWire. I want to talk about the issuer side a bit because I know the power of this content and what it provides issuers. Obviously, for the right deals, you want to have a good ecosystem of investors being connected to healthy startups that are primed for growth and on the right portal. Of course, everything's got the right foundation for success. What type of impact is this having for the issuers?
Yeah, I think, if we just pull back for a second, we look at the space, and even just, you've been in it from the very beginning. Just last year alone, when I talk about the beginning of 2020 and say maybe February, if you looked at, we'll just say WeFunder as a platform. WeFunder had probably at that time 70 deals, 70 issuers raising on their portal at that given time. There was a low amount of number of issuers out there trying to raise. Well, you fast forward to today, here we are in the middle of 2021. There are well over 200 plus just on that platform alone. And so obviously when the SEC raised the rules, everything went up on March 15th. The $5 million cap went up. It brought a lot of players in the space that wouldn't have gotten out of bed for $1 million. Well, now what happens is a lot of people are showing up, and it's great. It's great for the space. There's a lot of money being raised. You see a lot of the numbers out there. Look at how much is being raised on all these platforms. It's really great. But the thing that issuers need to be aware of right now is, and I don't fault the platforms, but I think they're a little bit of sunshine rainbows. Come over here, you'll raise $1 million. It's going to be so easy, so great. It's like recruiting a college basketball player. No, you'll start day one. You just come on over here, just sign this letter, and it's like, sorry, son, you're going to sit the bench, and maybe you'll get to play at some point. But you got to put in a lot of hard work, and I hope that it works out for you someday. So, look, the portals have their business model intact, and specifically some of them are, more of a volume play. Some of them are really, I only do a few deals, smaller platforms. They're looking for deals to potentially IPO, and that's the cool thing, is there's all different sorts of platforms out there. But the thing that I think issuers need to realize is that there are a lot more people raising capital in the space right now, and there's not a whole new army of retail investors that just decided to show up when the cap was increased. Nobody's out there, portals included, spending millions of dollars to acquire a new million batch of retail investors. Everyone is pushing, all the issuers, all the portals are focused on deals, but no one's focused on retail investors. And that ultimately is where the win is going to have to come for the issuers, is if you can find and leverage those channels and opportunities that have retail investors. They trust people like StartupWire or even some of the publishers out there. That's going to be the biggest bang for your buck. Now, if you have a great big audience that you have a list, you have people that are really kind of rabid fans about you. Now that's great. You could do pretty well and maybe not even have to leverage any kind of outside marketing. But all that to say is I think issuers think like, I show up, I can raise $1 million. But there's a lot of factors that factor in behind the scenes that I don't think issuers are really thinking about. And one of the biggest ones is if the space is not known yet, there's still a whole lot more education and a whole lot more people that need to come into the space to learn about equity crowdfunding.
Oh, yeah. And we talk to equity crowdfunding issuers on a daily basis. We work with a high volume of them about some misconceptions that they've received. In some cases from the portals or articles about the industry, they do make it sound too easy in many regards. I'm not trying to generalize there. I see excellent reps at WeFunder, StartEngine, different platforms that have been through the trenches and want to have the right game plan for these groups right out of the gate so that they don't find themselves in these holes later on. But you need high volumes of traffic to produce a small amount of conversions to then maybe stimulate some social sharing. If you're taking audiences who have already invested on one of these portals, the overall conversion cycle could be shorter, the timeline could be shorter, because it's like you said, you don't have to take the audience through that education of what is equity crowdfunding. how does this work? When can you anticipate an exit? That's all been understood by the audience if they've already invested in one of these platforms. So that makes perfect sense. And how are you finding the best deals? As an investor, I know you've been the lead investor in some of the top campaigns of 2020 and here in 2021. What are some key factors? We hear the team, there's talk about valuation and overall use of proceeds and growth plan. What stands out to you in terms of aligning who you're going to work with, who you're going to talk about with your voice?
Yeah, no, it's a great question. And as you know, I'm sure you guys spend time talking to all kinds of issuers. And there's some that you just go, man, I think you're going to do great, but you're just not a right fit for me and what we're going to do and how we can help you. And so that was one of the big things that I was super focused on in 2020 and even now in 2021. From the very beginning, any deal that I've worked with, I've just decided going, do I actually think these people have an opportunity to exit? Like, now, look, I don't have a crystal ball, right? But you can look at some factors and go, okay, I see who their team is, like you said, some of those pieces. I see what their model is. They just need, like, there was one company that I worked with, and I'll get around to answer the question. There was a company I worked with last year. The name is Nextdoor Photos. And these guys just were banging their heads against the wall trying to get VCs to invest in them. And I just couldn't understand why VCs wouldn't. They literally needed 500 grand. 500 grand. They weren't even trying to raise $1 million. They're like, we just want to do 500 grand. We're right there. But it was one of those deals. It was funny. Like, it didn't fund as fast as I thought it should. It's one of those deals I'm like, this is a really good deal. What is happening, people? And it's still new in the space. And, it's a real estate thing. So maybe like real estate photography didn't seem as sexy as like a robotic arm or whatever, right? I mean, it was photography for real estate. Everyone's like, man. Well, they got their 500 grand and that's all they needed. And they literally started to skyrocket. I mean, the thing I didn't understand is they were doing double revenue every single year for the last 3 years, on track to do $10 million in that year alone. And after they raised the capital, they were able to put the team in place and start to scale. Then they landed a deal with Zillow, which was a multi-million dollar deal. And I think my guess is one day Zillow will buy them. This is Zillow just going, let's do a trial run before we buy them. So every deal is different, right? But the thing that I always try to look for, I go, okay, is there humility in the founder? Do they have the fight? Are they going to be humble enough to go, okay, I got to figure out how to pivot, change my company? Because every startup's going to pivot. Every startup's going to change. There's going to be ups and downs. But if you have some humility going into it, like I'll talk to founders that they go, I'm like, oh, what's your valuation going to be? And they're like, I think I'm going to value it at $100 million. I was like, $100 million? You haven't made a dime yet. What makes you think your company's worth $100 million? So if there's some founder who's living in la la land, it's not like they don't understand reality, then that's just not the founder for me, because we all have to live in a real world here. We have to figure out what expectations are and try and reach those. And the other side of it too, you talk about humility. I like to be able to, I was literally texting one of the founders I worked with last year at the beginning of this year, this morning, just, hey man, how you doing? How's your family? And so it's not just a relational thing. They got to have hard numbers. Is their valuation in the right spot? Does it make sense? Is it like, okay, are you reaching here? Is it like, okay, I can get there. I think you're maybe a little high, but it's right. But ultimately, it's just like, who else is swimming around you? Who else is like in partnership with you that go, they could stroke a big check. They're just waiting to see what you could do. Because I've worked with founders that are like, yeah, no one's going to give me the money, but then we help them raise $500,000, and bam, what do you know? An angel group or a family office who was like, we'll just wait and see. They just show up and they want to stroke a check. Well, at that point, the founder now has the power and the leverage to say, hey, you know what? The terms that we talked about before, I don't want to do those terms anymore, because here's what I've raised at this particular valuation.
Yep. I'm
sorry for you. And so I just love the power of Reg CF, and I love a deal that any deal, like, some are bigger risks, right? You go, okay, this one's going to, I think we're seeing less and less companies. There's a mix. There's some that have big risks that are just an idea, and I'm not really super crazy about just the idea, guys, like, because I'm like, I need to see that you've made some kind of money. Someone has forked over cash to you to buy the thing that you have. Now, it may not be a ton,
Yes.
But that is another thing that I like to look for as well. So I know I'm kind of all over the place there, but I mean, I think just humility, any kind of revenue, valuation has to be in the general space. And if your valuation's off the charts, then it's not going to work for me. And I think just seeing that we could work together and, probably go grab a beer together is something I factor as well.
Absolutely. Teamwork, team, fitting into that last point. I love how you pointed out humility. Early in my career, I saw ego pull apart some startups that I thought were, going to the moon. Right. And that humility, that being able to pivot and assess what's working, not working, change things up, optimize towards the milestones. I've seen a consistent factor with successful companies in this space and with entrepreneurship as a whole. Yeah. So I really like how you phrased that. That's such a key thing to look for. It gets tough for us to pick where the winners are going to be, and I've had these conversations with portals as well too. I've even had groups with very high valuations that I questioned, and they were some of our top performers. I've had other campaigns that I thought were slam dunks, and they performed marginally. So I try to put the marketing hat on and say, hey, I got to stay in my lane here, but I can't tell you whether it's going to hit or not. This is what we're going to look for. Right. So it's fascinating to me because, again, I know you're being modest and your scorecard about what you're picking is very high. So, you have that sight for these groups. So these are great facts to be looking at here in identifying what campaigns are going to do it. Like you said, the inherent risks across the board, but very interesting.
Well, I think, one of the things I try to pride myself on is look, again, I want to be able to text you a year and a half from now and go, hey, and you go, man, that was a really great experience. If the number that you wanted was hit or not, and go man, Chris fought with me and for me all the way to try and get there. And I think sometimes one of the things that I'll find myself in, I'll have a founder that's okay, I raised last year, it was really great, really successful, and I got to go back. And I'm like, well, why do you got to go back? Why do you got to go back and get some more money? And well, we the pandemic and all the other things. I'm like, oh yeah, okay, I get that or whatever. But what has changed in your company to raise your valuation to go try and find another $1 million? And a lot of times it's just well, nothing. I was like, well, then I can't. I was awesome to ride with you the first time, but the second time, I just one of the other factors. Here's one of the biggest factors that I think about that mom in Tulsa who made the decision to say, I'm going to put $1,000. I saw this thing. I'm going to put $1,000 in this deal. I really, really want her to get her money back and then some. So that is when I look at these deals, I go there's people on the other side of this thing, and I met with the founder not long ago. She's like, we're struggling. We're trying to figure it out. We haven't figured out a model or whatever. And I'm like, okay. I was like, well, she's like, what would you do? And so I just gave her some advice. It was just more of a counseling session than it was there was no money being exchanged. I was like, yeah, let me just help you. It'll all come back around. So we were on this call, and I said, well, I would do this. There's this route, and then there's this route. And I said, but there's a third route. Can I be bold enough? We had enough time on a phone call to go, can I be bold enough to give you a third option? And she said, yeah, sure. And I said, the third option might be to shut the whole thing down. I was like, you've spent this much money, you've gotten this far down the track, you're not seeing the traction that you want, and I just don't know if anyone is cared enough to tell you that this option. But she was like, man, if I would start all over, if I knowing what I know today, I said, well, you technically can start all over because you haven't really you've made $5,000 in the last year that you've been working. So something the market is telling you, something's happening. You told me you tried all these different things. And she was like, yeah, if I actually am thinking if we don't make money by the end of the year, I'm going to shut it down. I said, well, that's good that you have that. I said, now with that knowledge, do not go raise money on equity crowdfunding, knowing that you're going to more than likely lose people's money. Don't do that. Find a way bootstrap wise, and so that's for me. I'm always thinking, I have to put my head on the pillow at night. I want to pick a great company, a great founder that I like, that I trust, that I even think anyone who's following me at StartupWire would go, yeah, I see why Chris likes that company. Maybe they invest, maybe they don't, but I'm going to hopefully put great people in place that are actually thinking about the investor as well, not just going, well, no, we'll see what happens. We'll just
Yeah.
burn it all, and who cares? It's like I can't do that. I can't do that.
It's so good that you're making those recommendations. I don't think all service providers are on all sides of the table for equity crowdfunding. They're looking more at the chances of success, but looking at it long term and really thinking about the individuals involved. Again, we need more success stories across the board,
Yep.
and for it to be a better experience for everyone involved, particularly investors.
Yep.
So it's great that you're pointing that out. Capital is not always the answer. Sometimes there's fundamental aspects of the business model that need to be changed around.
Yeah.
I could tell you, with our experience as an agency, we bootstrapped, and if we were funded right out of the gate, we may have went in the wrong direction a few times. We had to really let the market tell us what was working, and go through some of those tougher months. But at the same time, it panned out. We were able to find where we were able to deliver the most value. So I believe that when speaking to founders as well. And these are powerful vehicles, and if you market it well, you could see a very strong group of investors added to the puzzle. And if it all falls apart, what's the point, right? I like how you talked about social proof and validation earlier too, about that first check, having some initial amount showcased on an equity crowdfunding campaign, or even going back to the VCs after you've completed a round, and how that changes up the discussion, how the dynamic's different at that point. There's a saying I've been using of momentum is investable. And if you see the right parties signing off on it, industry experts, VCs and investor thought leaders saying this is a good deal, if every time you look there's another 50, another 100 new investors who have backed the deal, it looks attractive. So from one standpoint, as a marketer, that's great. That's what we're playing for. On the other hand, we don't want to do that for the wrong brands. It could just create a worse situation for everybody.
Yeah, no, it's really true. I think one of the things I hope issuers, anyone out here who's trying to raise capital, thinks about it is, you've got more opportunity in your network than you probably even realize. I think people want to take the easy route and go, well, let's just throw some ads on Facebook. You're like, that's cool, but let's see what you can pull out. What kind of rabbit can you pull out of your personal hat? And I bet you'd be shocked. And one of the things I try and tell issuers all the time is I'm like, if you think about the math, I mean, it's all math at the end of the day, right? And relationships, math and relationships. But it only takes 1,000 people to invest $1,000 to raise $1 million. That's it. That's what I try to tell people all the time. Now, it's easy for me to say that sentence. It's another thing in theory, but you're right. If you can leverage momentum, specifically, one of the things I think issuers don't leverage. Now, every platform is different. Not all of them have the opportunity to do get different platforms set up differently. But like the WeFunders of the world, and even the Republics of the world, and Start Engine has it, but it's a little different functionality where you could raise privately before your campaign goes out to the world. So some of them call it friends and family, whatever. It's still public out there, but it's really more like hidden, and you have the opportunity to kind of leverage your own personal network. And that's the thing I think is massively underutilized in this space, because when you're starting off and you're like, campaign's live and it's zero, and you're like, all right, I got my mom to put in $500 or whatever. A couple people, you're looking at $23,000. But then you look around, you're on an Amazon wall with all these listings, and it's like 500,000, 700,000, 200,000. You may be an amazing company, and people might be able to see past that number. But a lot of times there's social proof. They're looking around going, what's happening here? But you could have hit that number on your own through your network, through private, through relationships, friends and family, through, maybe through webinars with publishers or content providers like us. You could have gotten to a 250 mark, brand new company launches. Whoa, what is this? You talk about momentum, and then what happens is there's momentum of the crowd, and then it gives the opportunity for the marketer to have a little bit better success. And so I think that's just a piece that I wish founders and would recognize more. But now it's the absolute opposite. Now it's like, let's just go test the waters. Let's just go see who will give us money. And then what happens is founders go, they file their Form C, and then they look on the other side and they go, well, why didn't half of that money convert? Because someone decided they were excited about you 3 weeks ago, but then you filed your Form C and they're going, hey, do you want to give me that $2,000? You're like, no, I took a really cool trip last week. I'm gonna pull back my commitment from you. And so I get the power of test the waters. I get the opportunity that is that, but I think if founders could slow, because everyone wants to raise the money right now. They're like, oh, we got to raise money. And so it's always a red flag for me as well when a founder's like, I'm on death's door, I need to raise capital. I'm like, well, this is not going to fix your problem. Like this is going to maybe give you a little bit more runway, and you still have to have a problem. So that's where I feel like if a company's like, okay, we don't have to do it right now, they're able to be patient on the other side, then I think they can see really good results, especially leveraging the network that they have on the front end.
I couldn't agree with that more. I even use those same numbers with 1,000 investors of $1,000. And if you're listening in and saying, wait, we're trying to do $5 million on a Reg CF or whatever the amount may be, right, start with that amount. It is such strong social proof. Mm-hmm. If I get to a campaign and there's $1.5 million raised, I'm going to pay a lot more attention to it than if I get there and there's 5,000, 50,000, even 100,000, sure, which is what the portals are recommending coming out of the gates with. And nothing to be balked at. 100,000 is great. Yeah. Just trying to show, and we see it in analytics, the conversion rate is higher the more that you raise, going back to that momentum. And talking about audience further, we're working with issuers on multiple rounds at this point. One of our issuers run our fourth round. I've done a Reg D, Reg 2 Reg CFs, Reg A+, nice, and they have over 5,000 investors. They could continue to go back to that group. Yep. Like you mentioned, you got to have some progress. You don't want to go after investors for the same, use of proceeds and asking them for more capital. You got to have those developments. But at the same time, they're vested. They're part of your success story. They want to see you grow. Audience building is key here. That's my real takeaway for issuers for Test the Waters is not, hey, get as many reservations as you can and test the waters, but build your audience. Build a big, powerful, 10,000 prospective investor audience of people who want to know when you go live. Don't pay too much attention to the reservations. As you said, the money gets spent different places at times, but that audience is valuable.
Yeah, it's 100% valuable. I think one of the pieces that, I know we'll talk about some recommendations here in a little bit, but one of the things I would say is that right now, you have to find a way to stand out. Again, I can't say this enough. Like someone shows up at a portal, it's like they're at Amazon going, all right, what do I, if you're on nobody goes to page 23 to buy the keyword that they just searched. If they're looking for oven mitt, they're not going to page 23 for oven mitts. They're buying it on page 1, right? There are ways and things you should do if you're a founder and you find yourself on a portal and you're not trending or you don't have hundreds of thousands of people in your audience. And I think the way that they do that is, look, this is still a very human thing. There is a individual on the other side of that computer screen wanting to know about the company, but really they're wanting to know, like, what about you and the company that you're building? Why did you build this company? Why did you start this company? And I think a real opportunity that nobody's really leveraging right now is content beyond the page. Maybe it's in the form of updates, maybe it's in the form of social media, maybe it's in the form of some sort of webinar. But I think that's the piece where retail investors go, I see her passion, I understand the numbers now, and I didn't quite get it from that listing, because everybody knows. It's like, it's your best foot forward, but the thing that makes someone buy on Amazon is the stars and the ratings. What do the people who bought this thing actually have to say? But this is another way for you to put some stars out in front of these people to go, hey, here's who I am, here's what I'm doing, here's our struggle. Because that campaign page, it's polished, it's put together, it's thought about, you've got your little video that everybody likes. But look, if they could hear you go, here's our struggles, here's where we're winning, here's the pivots that we've had to do along the way, I think issuers would really, really win to kind of step beyond the wall and be transparent. I think they would garner an audience, and I think they would garner more investments along the way as well.
Absolutely. And I've seen founders, issuers resistant to that at times. And in some cases, it's priority or even marketing. They'll say, hey, we're not interested in branding. We really just want to see investments. And I have to explain to them the whole marketing funnel and try to put them in the shoes of the target audience and show what digital due diligence looks like. And if they're searching around and they see social feeds empty, or if they get there and they're pointing at video channels and articles and upcoming webinars, all of this activity, it's a different experience. It says something separate about the organization and speaks more towards their valuation. If I see a company that's valued $20 million, which is becoming more and more of the average on these portals, and they don't have a single post, they don't have any type of thought leadership, there's just an inconsistency. So being able to set up that funnel, anticipating 7 or more touch points, as on and off the portal, as you're mentioning here, and really being able to showcase that expertise and why that company is positioned accordingly in their vertical.
Yeah, I think the thing that a lot of founders don't understand, especially those that come in with a $20 million valuation, they're maybe banking at the bank, Silicon Valley Bank, they understand. They go, but this is a nice little bridge that I could do before I get to my A. I've raised my seed. I want to come over here. So there's more of those companies coming into the space. But the thing that I think people miss is like the way you tell the story to a retail investor is very different than the way you tell the story to a VC or a fund or a family office. Those guys are looking for very different things. But the retail investor is trying to connect like emotionally with it because they see the problem that you're solving. Have you built something that they've actually dealt with that's an issue, and they go, yeah, I think that could really solve my problem in my life. I'm going to give them some money. Or do they connect somehow emotionally with you? I mean, the VC stuff is really more of a numbers game, and there's not a lot of emotion attached to it. But I think the CF world, there's a lot of emotion attached to it. And I think, like you said, going back to people they're there to have some fun, right? They're there this is more of an entertainment value for some of these retail investors. So if you're not speaking to kind of their guts, their heart, the thing that gets them jacked up and excited, then more than likely you're probably just too boring for them. And maybe you're perfect for VCs, but if you're trying to raise money on Reg CF and it's just transactional, you're going to have a problem.
Sure. Got to find the right space for you, see which vehicle is best.
Mm-hmm.
And, what about for founders who are listening in, want to give a few recommendations? What should they test out for their equity crowdfunding campaigns? This could be in the form of marketing. This could be, how they communicate their offering on the page. What type of tactics should they test for their raise?
Well, again, like I said, I think you should do everything you can in like a private mode before you launch, a friends and family mode. Before kind of their numbers officially released to the world, do everything you can there. So, and that's going to come back to your customer base, your what kind of big ticket people do you have in your life that you could be leveraging, your network. I mean, I worked with the founder. She was really stuck in her raise, and we started working together, and I was like, let's see what you can do through your customer base and through your personal network. It's not going to cost you any money. This is not going to cost you any money. It's just going to cost you some time to do the work. And in probably about 4 or 5 days, she was a smaller campaign. She wasn't trying to raise even $1 million. She pulled in another $100,000. And it's just like, whoa, that's a big deal. Bringing in another $100,000. So I would say do everything you can to leverage your network as best as you possibly can. I think, yeah, I mean, make sure your campaign page is clean. I'm not a huge fan of just the sit and talk videos. Hi, I'm a founder and you should invest in me. I think it's, and I know some of these founders are not comfortable on camera. So that's find somebody else who's comfortable on camera to talk about your company. It doesn't necessarily have to be you. You could be a massive operations person that just sucks on camera, and that's okay. Find somebody else in your ecosystem that's good on camera that can help communicate and get the vision of what you're doing out there. And I would say content. Do everything you can content-wise with whatever partner. If you're hiring a marketing firm like yours, Jason, they need to be thinking about content versus just like, I'm just going to retarget them 7 times on Facebook. It's not going to work. People are getting worn out with that. It's just not going to work. And again, it comes back to humility. Just be willing and open to listen. And I think also to like step back and look at the whole picture, because founders are going, okay, how much is that? How much is that? And they're going, okay, that platform is going to take this percentage. I got to pay this for my audited financials. It's going to cost me this much for the marketing spend, and then the fee for the marketing company is going to cost this much. But a lot of people aren't going to tell you those costs on the front end. Anybody who's going to be transparent with you to go, hey, realistically, it's probably going to, every million thereafter is going to be a better return on money. But the first million, you're going to have some costs that you're going to have to do to kind of get this plane up off the ground. And if you understand that, and it's funny how a founder can go, yeah, I understand if I put $5 in Facebook, I get $20 back. but sometimes they just disconnect when it comes to, I need to put 20 grand in or 30 grand in to market this thing so that I can return investment dollars. Sometimes it's wild how they disconnect there. And then I would just say, be humble. Just be humble. Be open. Be willing to learn. Be humble, and just know that it's not going to go the way that you necessarily want it to go. It could go better, but things aren't super easy. And then the last thing I would say here on this piece is one of the founders that I really respect is Christine Utram with Everyday. She raised on WeFunder, and she's raising right now. I don't work with her. She's just a friend. But Christine woke up every day on her first campaign. I was talking to her. I had her on a podcast, and she was like, I wake up every day going, what can I do to move the needle for my campaign? It wasn't like, what can I do to text my marketing agency who's doing all the heavy lifting for me? She was taking personal responsibility for her campaign. And I think anytime you see a founder, like you look at Renji with Immersed and what they did, and Christine, you look at some of these founders who are literally waking up every day going, this isn't the fifth thing on my mind. This isn't the seventh thing on my mind. This is the first thing on my mind, because if I'm the founder, I'm the CEO of this company, I'm the chief, money raiser around here. I got to go get the capital and get the cash. And so, because what happens is the longer you live on a platform, people are going to go, what's going on there? What's happening there? And you're distracted. And we had big things happening. There's always going to be things happening in your company. But what you want to do is, like you talked about, momentum. You leverage it. You wake up, and every day you're trying to figure out how you can play a part in raising that money. If it's a post on LinkedIn, if it's an update on your campaign, if it's texting your marketing people, hey, how are we doing? Anything you need from me? I mean, I think that goes back to the humility piece again, though, just being willing to work hard.
I echo that. The case studies of the top campaigns we've been a part of, I give credit to the founders first and foremost, and they're generally the most active founders. They're the ones that are contacting us saying, hey, I'm going to be on this podcast tomorrow. I'm going to be speaking at this event next week. I just got this write-up, all on top of what we're doing. Yep. They're just waking up and hitting the phones, hitting the emails, humility, just trying to do whatever they can to hit their goals more effectively for themselves, for their team, the brand, and the shareholders. I want to ask one last question, kind of a combo question. You said be prepared for things not to happen the way that you originally planned. And I think that's part of the process, not an exemption. You hear all these great recommendations, the list you just provided, on point from our experience as well to the max. But what recommendations do you have for an issuer who's not hitting their goals? How can they optimize? And can you give any examples of your top scaled campaigns that you've seen, whether it's something you've been a part of or just watched? How do you optimize and scale?
Yeah, I mean, I think every single, sometimes there's a lot of different factors, right? You just go like, hey, here's the magic pill to help you figure out how to get out of your funk. Because you and I both know, Jason, that when a campaign stalls, it's really hard to juice that thing back up and bring it back to life, because more than likely they've dropped down to the 175th deal on that platform. So to try and get back up to the top of the page where people can see it is really hard. And so I think it's, first off, what I would just say is like, it's okay. You're for sure not alone. And others have been there, and others will be there after you. I think you have to first start, look in the mirror and say, okay, what have I done to get to this place? And what can I do to get us out of this place? And, if there's a marketing firm that you're working with, I would sit down with them and go, okay, what have we tried? What success did we see? Where are we plateaued? And what else can we try? Do I need to get on a webinar? Do I need to do a LinkedIn at 2:00? I'm going live. I'm on YouTube, like whatever it is, like make sure you can put your head on the pillow when the whole thing is done to say that you did everything you possibly could to get in there and make it happen. And yeah, I mean, I've seen campaigns, and then also too, there's vehicles and ways out there other than just advertising on Facebook. I mean, you can get with financial publishers if they decide to pick you up and share you in front of their audience. That's always a good option. It's not, don't bank on it. It's a bonus if it happens. but don't bank on it. And don't bank that, like, when they make a recommendation that you're just going to fund $2 million tomorrow. It's just that isn't real either. But I think, find the different avenues, do your research, look around. This is a new space, and more than likely, if you're working with a marketing arm, and you've hit a wall with them, like, they're probably trying to figure it out for you as well. If they're not, then have a hard conversation with them. But then they also probably know people in the space that go, hey, maybe we could try this thing over here with this person, if it's a webinar or if it's a podcast interview or whatever it is, to see how we can move the needle. That's a big one. And so for me, I've seen campaigns. There's one that we worked with last year that raised 1.4. This was before the cap was raised. They raised $1.4 million. It was the first one to ever fund in the friends and family mode. It was Vulcan. It was an electric motorcycle company. They ended up raising 2.5 when it was $1,070,000. And so I've seen the success. They had the momentum. They had the time. I think that's the thing people have to look at too. What's the season? Part of the reason why Nextdoor Photos wasn't, I think people had a hard time seeing what their deal was, is that they launched in March, the middle of March of 2020. Like, that was, the world was collapsing in March of 2020, and they still raised $500,000 in about 45 to 60 days, which I was really, really excited for them. And so, there's a lot of options. And the thing I would say to founders out there, there's a lot of people that are going to tell you they're an expert in the space. Like, oh, let me just tell you, if you just give me all this money, I'll make X, Y, and Z happen for you. If they're saying that to you, then you should probably run, because they don't know what's going to happen. They might be able to produce some gold for you, but if they don't tell you that you have to work hard and that there's a lot that's going to have to come from you as well, then you should definitely be nervous about that. So, I've seen companies that have been stalled and they just put a lot of elbow grease and personal hustle into it, and it's been a really, really fun couple of years, man. I've gotten to meet some really great founders who are friends now, that I wanted it just as bad as them. And so that's and not just for them, but for the people who put their money into the deal. It's and I think sometimes we get lost. This whole ecosystem that you and I are in, I think the retail investor gets lost in it. They're the ones fueling the whole thing. They're the ones that are driving this entire engine. But I think sometimes we can get stuck here because, it's just the next deal up, right? Portals, it's the next deal up, and they're trying as best they can. They're growing so fast, they don't have the team. And so it's just, if we can think about the retail investor, I think you're going to see yourself having a successful raise.
Absolutely. Focus on the fundamentals of it, getting one retail investor to convert, and then replicate that model. The examples you provided, the recommendations for founders and what to do when things are working, and then how to optimize when they're not. This is fantastic. Chris, I want to thank you so much for coming on. Your experience definitely shines, again, from influencer, your success on Amazon and the nonprofit space, all translating here to financial publishing. I'm sure some of our listeners would love to get in contact with you, maybe continue the conversation. If so, what's the best way to do so? What's your preferred method?
Yeah, I'm really bad on social media, but you can go find me. Just look me up on LinkedIn, and I got the crazy last name, Graebe. Just find me, send me a message, and I'll if I can serve you somehow, I'll help.
Perfect. And again, audience, highly encourage you to do so. Chris is being modest here, understating his abilities and understanding of the equity crowdfunding space. So don't be bashful. Definitely do that. And Chris, want to thank you again for coming on. Listeners, thank you for joining again today, and we'll see everyone next time.